great Memorial Day weekend. Again, to those of you who are serving our country and who have served our country, thank you for your service. All right. I wanted to kind of continue on what I did my last blog. I get a lot of common questions in private messages on YouTube, on my channel. I get a lot of spam too, so forgive me. It takes a while to get through those all. But I wanted to go over real quick, kind of, I guess, your different options. Meaning, some of the stuff I hear all the time are inaccurate, actually, and I wanted to make sure I clarify some of that here. So let's get through that together. Hold on, let me try and make sure this is adjusted right. All right. So a lot of people go, well, my broker told me never ever sell a naked put because it's too much risk. I said, okay, well, yeah. Well, I get lost for words. Okay, so for those who are new, I'll just walk it to you step by step. So here's what a short put looks like. In Tastyworks, I love it. You get short put option or short put, and you can pick whatever days you want. I'm just doing it like this for now. I'll hit go. All right, and I'll do it one standard deviation out of the money because this is kind of the norm here. So for example, here's how this works. If you sell a put on SPY up here at this strike price, which is the $235.50, $235.50. See the green area? You're making a bet that SPY at the end of, let's say, 17 days will be above $235.50. Well, where is it now? $241.50. So what is your chance of being right? You have an 85% chance of being right. So now let's take a look at your risk. So the reason why a lot of these people give you this information is, well, remember now, when you do this, one options contract in the SPY controls 100 shares in the SPY. So you are controlling 100 shares of SPY at $241.50. Okay, so you got to do the math. That means you're controlling about $24,150 of stock, right? So when you click on this button in Tastyworks Trader, it'll show you your risk. The difference is this plus this is the total. So because, oh my God, you're gonna lose. You could lose $23,492 and some odd cents. That's the most you could lose. So they try to scare you to don't do that. Let me manage your money. Blah blah blah. Right? Well, here's the thing. Well, assuming you had enough, let's say you traded, you had $25,000 in your account, for example, right? So you go, don't do that. Just buy. They tell you just buy the stock, the SPY index. Just buy the stock. Okay, so let's look at that. I'll go to strategies, and you can just click on down here. Click on stock. Go long stock when you're just buying whatever 100 shares at 1 standard deviation or whatever. Well, you can. If you buy stock, you can only buy it at the current price. Okay, you can't buy it lower. So you can't lower your cost base. So anyway, let's do this. So you buy 100 shares of SPY, okay, at $241.50 a share. Well, what's your risk? It's the same, isn't it? Because SPY could go to zero theoretically. So you could lose the same, whatever, $24,153, right? Click on this thing right here. Okay? So your risk is the same. In fact, to me, well, here's your right here, here's your probability of making a profit. Okay, it's 50-50 shot. Could go up, go down. That's the other thing about buying stock. All right? In anything, for example, the only way for you to make money is it has to go higher. If it stays the same, you don't make any money. If it goes down, of course, you lose money. And you can't lower your basis, meaning you can't get into it cheaper than it is at the current price, which is why a lot of the smart options players actually trade and sell puts in the options they're looking for. So I'll clear this and do it again. All right, so now, and there's other ways to mitigate that risk or that dollar amount if that dollar amount scares you. All right, so let's go back to this again. So in this case, if you had $25,000 in your account, your risk is actually less because why? You're not betting it'll stay above here. You're betting it'll stay above here, which is a lot lower, right? Here's a current, and you can adjust this to like whatever, 84 or whatever. I usually do 84%. Anyway, here's where SPY is trading now. You can, here's the thing. It is your choice. You can actually pick the amount of risk you want to take, and you can actually pick your probability of being correct. If you want to go higher, go higher. Because you had a 50-50 shot before, you could do that. Okay, if you want, and here's your probability of making a profit. Okay, or you could do what's called selling a put out of the money, a naked put out of the money. Now, this is the first step you're going to do. If you're beginning, this is one of the basic foundations you're going to need to make a trade. Again, I do these YouTube videos mostly for new people. If you're a veteran, you can stop, don't watch. You know what I'm talking about. All right, but I'm just trying to answer some questions as far as risk goes. Now, one of the things I get told by a lot of people is that, well, Mark, just do a vertical, right? That's how you eliminate the risk. Well, yes and no. Here's what I mean by that. So go to strategies. Well, I'll go to vertical. Here we go. Do something like this, right? Now, here's how most people do, how most people tell you to do a vertical. Do something like this. Sell the 230 put, maybe, and then buy the 227 put, for example. Maybe 3 strikes difference or something, right? Maybe you go 5 if you want. Okay, so now what you're saying is you're placing 2 bets in on the same trade, meaning this bottom bet you're selling a put. So see the green area in Tastyworks, you'll love it because it'll tell you where your risk is. Notice anywhere, if the stock ends up anywhere in the green period by the expiration date, you make money. Anywhere in the red, you lose money. Where is the stock now? It's at 241 and 50 cents. It's up here. Look what that means. If it goes up, of course you make money. If it goes down, you make money a little bit. And if it stays the same, of course you make money. As long as it stays in this green area, it can go down all the way down here and you still make money on this trade. Okay. Now this position here, when you buy a put, you're betting it will, you're making a bet it'll go lower. So basically you're protecting this bet right here. Okay, all this is covered in my free spreadsheet. I made a kind of a cheat sheet for vertical spreads. I put it on Twitter. You can follow me there, or do me a favor, if you like what you see, hit thumbs up and subscribe to my channel. Send me an email or send me a private message with your email. I'll send you my spreadsheet to kind of tell you what to do if you're bull, bearish, or whatnot. It's like your cheat sheet for verticals, so you can learn. All right, anyway, so look at the difference though, okay? You're going to collect a lot less because after you sell this, you still have to buy this amount. See that right there? But if you click on the middle, all of a sudden your risk is a lot less, right? Okay, but also your potential profit is a lot less. Your max profit is a lot less. So what verticals do is it doesn't, okay, so what it does is it lowers the amount your max loss is. It does not prevent you from having that max loss. Okay, so what I teach my private coaching clients is how do you set up a business plan and how do you trade so you mitigate that max loss of even occurring, because that's what you want to avoid. Information on that can be held, you know, see the links at the bottom if you want more information on private coaching. But if you want basic information on how to do a vertical, there's a ton of information out there. Just please be careful because a lot of it can be taken out of context, all right? But this is your first step. Now, the interesting thing about trading options the proper way, in my opinion, is all based on a basic concept of this. This is your basic foundation. You can see this, you can see that. It doesn't matter. As long as you understand what this means and what you're looking for and when it's in your opportunity, almost every single trade is made up of something like this. For example, watch. See all these strategies? Look, you can click on them and just, you can see they're all just a variation of the same thing. Okay, just different, you apply them at different points, but they're all either made up of either selling a put or selling a call, or buying a put, or buying a call, or any variation. That's when you click through here, you'll see all these different things. Okay, now golden gecko is really, really specific. All right, I was asked again, oh Mark, why do you call it a golden gecko? It's just an iron condor. No, it's not. Well, it is and it isn't. It's a specific type of iron condor that has been proven time and time again to give beginners anyway a great chance on and a great opportunity on how to learn how to trade options with a great foundation, and it's been proven to do very, very, very well. I personally do not trade that way anymore, or I trade something a little bit more advanced way, and that's what I've been teaching my private coaching clients. But if you're starting out, and that's who I'm talking to, if you're a veteran, you have your own system, great, man. If it's working for you, keep on doing it. Don't let me mess you up. All right. But if you're learning and you want to know the basics, you can start here, and then when you're ready to move on, hit me up and we'll discuss some other stuff. But here is a golden gecko. It's a specific type of iron condor. So in Tastyworks, which is neat, you just click on iron condor. You want the star to stay on normal iron condor. That's your default. You want your expiration to be 45 days. You want this monthly check. Do not check that one. Click 1 SD for one standard deviation. That should say 84% out of the money. And make your width 10 and hit go. Now this is a golden gecko. You notice I don't tell you what strikes to sell, because anyone who's been following me knows what a golden gecko is. A golden gecko is you sell a put, 1 standard deviation out of the money, closest to 45 days to normal expiration. You also sell a call, 1 standard deviation out of the money. How do you know? You want these number in here to be 84%, and you just line them up to this dotted line right there. See 1 standard, see right there? 1 standard deviation. See this vertical dash line? Line it up on there. It should be as close to 84% as you can. That's the put side, all right? See? Put. Here's the call side, right? Line it all up. And if you toggle this, it'll be back and forth. Now, so you sell a put, sell a call, and on the buy side, this is the one you're selling. On the buy side appears on top. Here's the price of the stock right now. Above it, you want to put the buy side. So in this case, look, I'm buying a put and I'm buying a call. Where? As closest to 2% in the money as you can, and it's at the 2 standard deviation line. See how it jumps? That means there's not an exact dollar amount there, so you just get close as you can, right? You want it to say 2%, okay, and you want to be along as close as you can to this dotted white line that says 2 standard deviation on both sides, okay, close to 45 days to expiration. And that's a golden gecko. That's what I illustrated on my Project Dough Tasty Trade. That's what Project Making Dough with Tasty Trade. I posted that on my free forum, the results. Just go there and look. And that was unreal. That was just great. It's totally mechanical. It's just great. Okay, so that's one thing. As you get more advanced, you'll understand how I teach people how to actually mitigate that max loss versus just lowering the amount you can lose. All right. So anyway, I hope that helps a little bit if you're beginners. People ask me again, another question I guess, how do you find stocks to do this on? I like doing indexes, but here, go to the grid. See? Go to the grid, and you can look at anything you want. You can do it notable stocks, whatever you want. You can go to liquidity, I like, right here. See this IV rank, make sure the arrow's pointing down. Okay, and if you're beginning, click on this filter, and you want to exclude earnings, and you want to move this to around 60 like this, something like that. And you want IV rank to be the best shot of you not losing any money. You want to only look at things with IV rank over 50. And you want to uncheck this because you want liquidity to be up here, right? And there you go. Okay, and if you're new to IV rank is this number in the middle. And I'll try to oversimplify what IV rank is. IV rank is the best. You heard of buy low and sell high? Well, IV rank is your best indicator on how you can do that. And when we do this, so what's neat is you're going to sell first high and you're going to buy it back later when it's cheap. Here's what I mean by that. Here, I'll show you SPY real quick, and I'll go switch here to daily chart, and I will just make it really easy, and I'll just load my IV rank only like this. All right, so perfect example. This bottom chart right here, auto arrange, and I'll go like this. Okay, so yeah, perfect. Okay, let's look at this. This bottom chart is IV rank, and that just stands for implied volatility rank. Now notice the usual inverse relationship between IV rank and stock price. So look, when the SPY is going down, there's usually fear in the market, so volatility goes up. When it goes up like this, you want to sell. Basically, you're selling volatility. So you could sell a put like I just talked about, because you'd be betting it'll go higher when IV rank is higher. That's when you have the least chance of losing money and you have the highest chance of making money. So when IV rank is high, look how long it stays there. It stays there for a very short time and then it collapses. So again, you want to sell options, sell premium in your options when IV rank is high, and you want to buy it back when IV rank is low. So let me zoom out real quick. Okay, so see that? So that's why I love looking at stuff above when IV rank is above 50, because look how long it stays there, like less than a week. Okay, look over here. I mean, it didn't get to 50, but see when there's a spike in IV rank like this, that's when you see a downtrend like this in the market. That means IV rank spikes. And then when it goes up, as you can see, it goes up here. Look what happens to IV rank. So you want to sell high, sell when IV is high, and then buy it back when it's low. And that's when you're going to make the most money. Because when you do these, for example, I'll just go back to the trade page and I'll show you what we're doing. Okay, so for example, when you do a golden gecko and SPY, you see how I'll click on this more time. When you sell a put, you can sell it for $1.19 per contract, or $119, right? And you're one standard deviation away. IV rank is right here. See that number 5? Okay, that's down here. See that? Okay. When IV rank is up higher like this same position right here, one standard deviation away, you can sell it for more money. So it's just like when you go to buy a car and you go to these car dealerships and you see the suggested retail price and then there's that dealer markup or addendum on it. That's what you get. That's what you get to sell to other people. You're selling it, and there are actually people who are really ready and willing to buy and overpay for it. They're happy to give your money and they're happy to overpay for the stock option you're selling. That's this. When this goes up, those prices in your options become inflated. So you can sell them for more money and then buy it back later. So you know that guy who pays over sticker and then trades it in 6 months later and gets hit tremendously low with a low value for his trade-in on the car he just bought, right? That's the same concept. Only thing is you become dollars. You sell them. You sell high and you buy low. And if you can sell high when IV rank is high like this, that's just more profit for you. People are actually willing to pay you more money to buy that option, which is another huge reason why people lose money trading options, is because by the way, we want those because we want them to buy the stuff we're selling, and they're more than willing to do that. That's just like what I showed you here. The guys that like to buy these calls or buy these puts from you, right? There are people who are willing to buy these stock options for you, right? There are people willing to do this, right? There are people willing to buy these, and they only have a 40% chance of making money. They're there all day long. All right, so you can take advantage of that as well. All right, so again, if you want to copy these charts, all my subscribers get them for free. You can check out the link below. Subscribe. There's a link to my free Tasty Trade forum. If you want to get Tastyworks, this is a free. Wait, where'd it go? This is a free platform. There's a description and a link, and you can get Tastyworks for free in that link right here in this video. Really easy. Doesn't cost you anything to sign up. Totally free. Use the platform, and the commissions are great. By the way, they charge I don't know if you guys are. Hold on, let me show you this. Now, by the way, this is great. The reason why I love Tastyworks so much is they do what's right for us, the retail consumer. So here's Tastyworks. If you go to the link at the bottom of this video, you'll get a link to here, and you can get a free account. Right? This is a game changer. They have turned the trading world on its head, and everyone's trying to figure out how to compete with this. $1 to open the trade. 0. It costs you nothing to close the trade. All right? This is crazy. No special privilege for people with more money. Everyone treated the same. $1 per option contract, 0 to close. That increases your profit margin significantly. All right, so if you want a link to Tastyworks, you'll see it down here. Get Tastyworks here. It's free. Go ahead and do that. If you want these charts, go ahead and subscribe. Send me a message. I'll get them to you as well. And there's a link down there in the bottom of these videos for whatever, any other questions you have about private coaching or whatever. All right, hope that helps. Have a great day. If I see anything that pops up later on in the morning, I will let you all know. All right, thanks.